Welcome, everybody. Thank you so much for joining me here. Survive or Thrive, Fighting the Fed, and my top picks for 2025. Who's here just for the top picks? All right, you can come back in about 12 minutes. We'll get to those. But first, we're going to talk financings. As part of the SOAR Financial Group, of course, we run Orin Inc. I'm just waiting for my slides to be loaded. We run Orin Inc. It's a financing company that I bought in 2016 off a gentleman named Benjamin Cox. And we track financings in this space. We've tracked over 55,000 deals in our database, roughly 1,400 companies in that space here in Canada on the TSX, TSXV, and CSE. And we personally track them. We have a data analyst that looks at financings on a daily basis, puts those out also on orininc.co, and just provides that information free of charge. It gives me personally a daily update on how the market is doing, how sentiment is doing. One thing this actually awarded me to do is actually finally double check my gut feeling. And that was, I always said the Fed is influencing our market and the investors are reacting to what the Fed is doing in New York or Washington. And we'll get to the slides, but it's great to do that exercise because I never had the chance to actually sit down. It allowed me a chance to look at that because I've been saying that in my interviews. I'm not sure who's watching my YouTube videos or SOAR Financially on YouTube. I've been saying that on and off here ever since, that's the one, March of 2022. Our sector is in a slump. We've had a bit of a good time last year for about 6 weeks, and then everything went to doo-doo again. So as I said before, as I was introduced, Kai Hoffman, CEO of Orin Inc. and the SOAR Financial Group at JR Mining Guy over on X as well. I mentioned that part, so we get to skip this. Is just giving you an overview of what Orin Inc. is. But keep this slide in mind when we talk about the rest of the data that I present here. We only look at companies that have $1.5 billion market cap or below, and financings, pure equity financed below $100 million. So keep this in mind when I throw our financing data on there. We don't care about the VRICs and the Newmonts of the world or any of the other major companies. We're looking purely at the junior segment. One thing that makes us unique at Orin Inc., we produce the Orin Inc. Index with a bit of a weekly indicator, and I really appreciate Jay actually forking out some money for a decent screen this year because you can actually read it, which is highly appreciated. You can see the lines, you can see the graphs, and the purple, by the way, is a 5-week moving average. Last week was a really weak score because it was a short week. Nobody wanted to do anything early or at the beginning of the year, so this is the first week of the year. That's why it's only a 15-point score. If I start speaking too fast, my coffee just kicked in. Raise your hand if I should slow down. But I'm also on a timer here, so I'm a little worried that I might not get to all the slides. But we set the benchmark, that's the thick purple line, back in January of 2011. If you remember, 2011 was a phenomenal market. January was extremely frothy. So the benchmark is difficult to reach. So when we break through that level, you'll know that we're in a decent market, actually. Or we had a good week, or there were a few bigger financings that catapulted our index higher. And a couple things to keep in mind, the index consists of total dollars of financings open, percentage of broker participation, and total number of deals opened. Who was here last year, by the way? There are a few familiar faces, I thought. Okay, yeah, you heard that part before, but I've heard that there's a lot of new investors here at this conference this year, and I'm excited about that. I'm really happy to see that. Let's dive into some of the numbers. And going back to 2011, that's when we started Orin Inc., we raised $4.5 billion in our space last year. That's a lot of money. And keep that in mind, that's within our coverage universe. Overall, there was a bit more raised, right around $6.5 billion, I believe. But that's within our coverage universe. One thing that's quite unique here in Canada, $3.5 billion of that roughly was without flow-through. So we raised about $1 billion in flow-through. It's a tax-exempt model. It's specific for exploration companies. But we're actually in a good financing environment. So I like chatting with Rick Rule, and I'm interviewing him here in about 60 minutes or so, and he says the industry is overfunded. I tend to agree to a degree when I look at this, because there's a lot of money around. There is a lot of money around, because if you compare it to 2018, 2019, or you go back to 15, which was probably the worst market I've experienced, we're raising twice as much money. So we shouldn't be in a slump that we are. But the money is flowing to the bigger companies. It's not flowing to the smaller companies, and that sort of ties in what I'll touch on in a minute with the Fed sentiment and a few other things as well. Banker and broker activity, it slumped a little bit. It dropped in 2024, nothing that I'm personally concerned about. I was quite surprised to see the jump in 2023, but it also means there's no other competition in our space. There's no cannabis deals to be had anymore. The brokers have to come back. They have to do our sector because Canada's not really big in biotech or anything else. It's really mining. There's not much else unless you look at maybe crypto, but I haven't seen any crypto financings or so. I don't really follow it, but it hasn't really popped up. The summer was really slow this year. You might have experienced it as well. I probably should have closed shop for 3 months and traveled, which I didn't. I don't know why. Maybe it's burnout. I've read it's part of burnout is that you try to overcompensate and work too hard and always try find something to do. Maybe that was it. Should have just closed shop. But it was really weak. Like the summer was horrible. But then September came around, and if you listen to my conversation of presentations, and maybe follow me on LinkedIn or Twitter, I said in September at the VRIC conference, which is another big investment conference, more institutional maybe, none of the investors complained about the market. None of the CEOs complained about the market. And it's just like I Googled the 5 stages of grief, and that's the acceptance phase. It's the last phase. And I was like, oh, hey, this sounds great. Like maybe we're through all of it. And we were for 6 weeks. Because you know what happened? The Fed cut rates. And everybody was happy again. Volumes came back, and we'll get to that. Total number of deals, like pretty much as last year. Nothing really to concern about. A lot of smaller financings, which you'll see on the next slide. Smaller financings meaning it's dropping the aggregate or the average dollar per financing. So only $3.5 million, which is, again, not too bad if you compare it to previous years. And within the last 14 years here that we're tracking it, we're actually doing quite well. You can't complain. A lot of bigger financings, you've all seen them. Some of the lithium companies raised big money. Patriot Battery Metals comes to mind, and a few others, of course. So, flow-through financings, it's become more important. So the tax implications out of Ottawa really haven't affected the flow-through space last year. It's actually improved financings. No, not improved. Like there's no correlation between what Ottawa's been doing in the flow-through sector. But people just flocked more to safe jurisdictions, Canadian investment, and it just ticked up again to 23.8%, which was interesting to see because in 2021, 2022, we've had a lot of like external political turmoil. Colombia, Peru, like we're going through leftist movements, and a lot of money was just invested back home. And I think that's sort of what we can see here as well. It's just better to invest in a safe jurisdiction or perceived as a safe jurisdiction. Financing breakdown by exchange. This is a fun one. Like I've been up since 2 a.m. this morning, and I spent a lot of time also on this. Finalized it this morning, and it's fun to look at the breakdown. We have CSE companies, TSXV, and Big Board, which we don't really focus on too much because they're just too big for our coverage universe. But $3.5 billion were raised on the venture, only $480 million on the CSE, and within our coverage universe on the Big Board it was 480, but in general it was like $6 billion or so that were raised on the Big Board, but we don't track that. So that's outside of our coverage universe. But what was interesting is the average financing size per exchange, and the two I care about most is of course CSE and TSXV, and there's a big discrepancy. You can see it, $1.3 million. What does that buy you? Think about that. Like, what do you get? We'll come to that. Value creation is a big topic. Like, yes, I run a PR firm as well, but we always try to create value. For us, for investors, it needs to make sense. That's what we're looking for. And 50% roughly of the deals were below $1 million last year. But what does that buy you? It pays for the audit, it pays for the listing fees, and maybe some geophysics. 66% were below 2 million. You can get a little more done, depends on where you are, location-wise. You can actually get some drill holes in if you're lucky. But again, it doesn't really move the needle. What does a 700-meter drill program do for you? The average 3.2 million, as I said on the previous slide, but the median is interesting. It's $1 million, the median on the TSX or on all the financings, but it's only 580,000 on the CSE. So half the financings were below $580,000 on the CSE. Tell me what you can do with that. Nothing. And I struggle with that. Like, it comes down to the overfunding statement that Rick Rule keeps putting out. Like, do we need these companies? Like, what's the point? Like, I do understand the incubator model. Maybe there's a reason for that. I do get that, but it won't move the needle. Big discoveries made are elsewhere when big money is being spent. So I asked earlier, like, who watches my YouTube channel, Soar Financially? Okay, well, at Soar Financially on YouTube, so follow that. But I mentioned in the intro, like, I think a lot about what is moving our sector, what is moving stocks, like the macro, discuss the macro to understand the micro. The micro is, for me, this space. Like, when you walk out here and you look around, this is the micro for me. It is gold, it is silver, but it is the mining universe. I'm really trying to understand, why is my portfolio not moving? Why do I have to tell my wife after 14 years in this industry that we still don't have a vacation home somewhere nice, right? That's what I'm trying to understand. And that's what this channel actually really helps me to do. I've been talking a lot of geopolitics lately. Had Jay Martin on the other day, but some really interesting discussions. And one thing, I mentioned it in the intro, is like, I wanted to gut check what I've been saying. Like, has the Fed influenced investment in our sector? And it has. If you look at it, and I've looked at the rate cut or rate hikes actually in 2022, the first one was like, okay, it happened. Like we still saw about $1.2 billion of trading volume in March. And then May 4th, the second rate hike happened, 50 basis points. It took all the wind out of our mining balloon, or all the air out of the mining balloon. It completely plummeted. I'm not sure if you can tell, but it dropped down to about $450 million in trading volume from $1.2 billion. It completely collapsed. Like risk capital completely disappeared from our sector. We saw it in our financing data, and now this is also, like, I'm just looking at pure trading volumes here. That's the financing. So trading volumes is another chart. That's the financing in it. It just plummeted. It just disappeared. It had its moments. Like we're heavily influenced by bigger financings. If a company raises $90 million in our space, we see a big uptick, of course. But on average, you can see a massive downtrend, capital left. Oh, sorry, just one more thing. The second yellow box, which you can actually really nicely see, because as I said, Jay invested heavily into the screen here. But euphoria came back, like last October, September, October. Starting with the conference around September 18th, all of a sudden financings happened, money flowed. Volumes came back in the market for about 6 weeks until the Fed said, we might be done here. And then we had a new president elect as well. And everybody went back into limbo mode and put their head back in the sand. And just let's see what happens. I hear over 100 executive orders have been signed already today. No idea what the outcome is. So we'll see. We're a bit in limbo. Miners versus the Fed. This is the trading volume that I mentioned. It just plummeted from $1.2 billion to $450 million. It just completely disappeared. This is just a chart that shows it. And it hasn't really recovered, because back in 2024, these are still the trading volumes. Like we're still trading at about half of what we've had before the first rate cut. And yes, we've seen a bit of euphoria in September, October, but we still didn't get to 1.2 billion. We barely reached 900 million. And then the euphoria just disappeared again, and November was down to about $650 million in trading volume. The TSX hasn't put out the volumes for December yet, so I don't have that chart for you yet. But I'm guessing it's not going to be more than $600 million. So we'll see. Total trading volume was only $7.75 billion for the year, so that's not that much either. Lack of volume also on other exchanges back in 2024 on the CSE, only $4 billion traded. It's 47% of that is the mining category, I'd say, because 47% of the companies listed are mining companies. It's not much. It doesn't do anything. Nobody cares. Although interest is really picked up here, which I really appreciate. Where's the money flowing? I always like doing this chart because it always tells you whether gold, silver, copper has any competition from any other funny metals. Funny metals is like lithium or graphite or any of the other ones. Gold is always around 50%. Usually it's about between 50 and 65% in our charts in terms of money. Silver, copper are the other dominant ones. Lithium, I mentioned Patriot Battery Metals raised $75 million last year. Nickel, zinc. That's roughly the distribution, and you can see that, I think, walking around here. It's roughly the equivalent to what we're seeing here on the floor. Now comes the fun part. I want to review my top picks real quick. I do that every year. Every slide, you can go back and watch it. I've done that last year as well. My top 3 picks, 69% performance. And if you were one of those online gurus and sold every stock at their 52 weeks highs, then you might have cashed out 112%. But I've yet to meet that person personally. They only exist online for some reason. So I sure haven't. Like, I trimmed a bit of my montage position. I've trimmed some of my fireweeds. I still own all of my banyan. I interviewed Tara Christie earlier today, and I'm actually quite positive that those 40%, minus 40%, will be recovered soon. Doesn't mean it's a top pick for this year, but it should be on that list. I'll get through them. I have 3 picks for you. I'm all personally involved in all 3 of them, meaning either I own shares, they're a client, or I'm just convinced of it. Like, I wouldn't be standing here if I don't like this company, and I'll put my name to it because it's being recorded. It's on the internet later, so you can take a look and look at the recording. Pan Global, I've been to the project twice now. It's fortunately only a 2-hour flight from my house. It's down in Spain. It's a copper project in the Iberian Pyrite Belt. Grupo Mexico, Atalaya, Fresnillo are just next door neighbors. What you're seeing here on the photo is me. I took that photo standing on the Bravo target, which has me the most excited. They're drilling it any day now. which could be their second discovery on it and could be a huge catalyst. So I'm hugely bullish. I bought some more at 10 cents. I participated in the 12-cent financing, and the stock is trading around 14 cents now. I think it's dirt cheap personally. They've raised $7 million back in November, so no financing needs, so you don't have to worry about getting diluted here next week. If they're successful, I hope they spend all the money they have in the next 6 months and then raise money again 6 months, obviously. We're in the exploration space. That's number one. Number two, Cartier Resources. They used to be a client for like 6 years of mine. We still talk, we still chat. I have no insider information whatsoever. I recently participated in a financing. I've been to the project a few times in Val d'Or. I like the management team. But one thing, like Phil was at my conference in Frankfurt last year, and he said, we're going to drill 100,000 meters in 2025. He has yet to tell me how he's going to finance that. So I've been hearing chatter that there's something in the works in Quebec, a lot of M&A activity. O3 gets just bought out by Agnico Eagle. I know Bonterra sniffing around, Goldfields bought out Cisco. There's lots going on in the Val d'Or area, in the Abitibi belt. So take a look, 13% overhang due to the O3 stock owned by Agnico Eagle now. They have, I believe it's the 23rd of January to figure that one out, or 28th, so don't quote me on that one. But within the next 10 days, actually, they'll figure out what Agnico is going to do with that 13% share participation, because they're already at 17%. That would take them to 30. I don't think it triggers a buyout, but it does trigger a reaction, because the buyout needs to be triggered, because you're buying from a single vendor. It doesn't necessarily trigger a buyout. You can still own 30% without having to buy the whole thing. But it's something I definitely closely watch, and Philippe needs to sort of back up what he said in Frankfurt in November. If he wants to drill 100,000, he needs to figure out how. Is it a joint venture partner? Is it a buyout? I have no idea. But I do like the stock. They have 2.3 million ounces at 10 cents right next on the highway in Quebec. Doesn't get much better than that. So it's a show me story. Another one is a really new one. I had 3 stocks in my head this morning when I was putting the final touches on the presentation, and I settled on this one because I own stocks in this one, or shares in this one. The other 2 I haven't bought yet. That's why I went Aris Minerals. Copper in Kazakhstan, Teck is a partner. They announced a discovery just last week on a new project area, the LMS project, 261 meters at 0.64% copper equivalent. Really, really prospective, more results pending, and they're financed. They still have $3 million in the bank. The stock is actually, I should have updated that. It's only 50 cents actually. I had a typo in there, or it's actually trading earlier today at 60 cents. It's 50 now. Somebody dumped 220,000 shares in the market. But at 50 cents, I think it's an interesting exploration story. If you're comfortable with Kazakhstan, that could be an interesting discovery play in 2025. Now, I spoke so fast that I actually have a minute left. I do apologize for that, but I really want to thank everybody for paying attention. Thank you so much for, stopping by. Make sure to subscribe to SOAR Financially. Really appreciate everybody's watching, commenting, and liking our videos. Thank you so much, and enjoy the rest of the day.